know that this general cycle remains, okay? So stage one is known as the accumulation phase. This is like watching paint dry. Not a lot of fun stuff happens. Now, quick note on this one. See this down here? See it? You're like, well, it went well below that box there. Oh, shoot. How do I delete just that? Oh, sorry. The reason for that, what was happening, that was COVID, okay? That big sell-off down in here, everything took an absolute crap, right? So really, it would have been probably more like this, okay? So let's take that into account, but Control Z, thank you. Anyway, in the accumulation phase, the big institutions, your BlackRock, Fidelity, JP, et cetera, the hedge funds, are building up positions. Now, this is really important to understand because if you and I buy a stock, unless you're a billionaire, you can buy pretty much as you want in half a second from your cell phone or from Schwab or E-Trade or wherever, right? But if you're trying to buy tens or hundreds of millions of shares, you can't get them all, right? They're not just, you can't just go buy right now. They're not available for sale. There's not that many for sale. So it takes them weeks and months to build these positions, to get out of these positions. That's something to remember. But in stage one, they're building. Now, why they're buying a position? Generally a fundamental reason. Either, for example, we're in a phase of AI. They're saying, okay, we think energy is the bottleneck, so we're going to start building big positions in the companies that are expanding the grid and building there. Or we think nuclear is the opportunity, so we're going to start building positions in nuclear. Or this company just happens to have huge sales growth, huge revenue growth. It's a restaurant chain that's taken off. It's a clothing line selling, whatever it may be. They're accumulating. Okay, they're buying it up. Now, eventually, once they've kind of bought up as much of that stock kind of on the cheap as they can, right? Once they've absorbed as much of that supply is out there, as much as you and me and anybody else is willing to sell during those months, now the markup phase begins. And this is where 95% of the money in the stock market is made, in stage two. Even your 401k, if you dissected every stock and went back 20 years, 95% of your profits are going to come during the stage two rally. This is our money zone. This is where we want to be. And if we can find these, life gets a hell of a lot easier, okay? So in stage two, we call it the markup phase because the stock is in demand. Again, big sales growth, big earnings growth, AI at the right time or EVs at the right time, whatever it may be, right? Everyone wants to buy it. And remember what I said, these institutions are buying up tens of millions of shares, right? When Warren Buffett built his Apple position, he bought 300 million shares of Apple. Folks, that stock, which is one of the biggest on earth, only trades about 20 or 30 million shares in total per day. So they have to kind of go to their trader and say, guys, we want 40 million shares of Roku. You've got to the end of the quarter to get it done. Don't be more than 20% of the volume, et cetera, et cetera. And so if you notice in stage two, notice how this red 50-day moving average never really gets violated. The stock pretty smoothly rides up that. And the reason for that is there's consistent demand. If your job is to buy 10 or 20 or 100 million shares of this stock, then each time it falls 5% or 10% or 15%, you're going to take advantage and buy more. That consistent demand, that constant day after day, week after week buying is what keeps these stocks from any big declines. And so usually, not always, I don't say every single day is going to go every week. I mean, there's down weeks, etc., but there's no big wild 50% drops in there, right? So all good things come to an end, and stage two turns to stage three, which is the distribution phase. Distribution, exactly what it sounds like. They are distributing those shares. They are now selling them. Why are they selling them? Well, either the stock reached what they thought the true value was, or that big sales growth or that big earnings growth suddenly slowed down, or we just went to war with a company or with a country that we used to get copper from, and that's involved in the data centers, and now it's not going to expand, and the earnings are going to get hit, et cetera, right, all down the way. Whatever the reason, they want out. And while they may be careful and consistent on their buying, they tend to just dump it when they went out. They went out now. That's why they say stocks take the stairs up and the elevator down, right? And you'll notice stage 3 because, one, you'll get the first real break at the 50-day moving average, that red line there, so it gets way below. You'll get big gyrations, this big wild volatility that we didn't see anywhere in stage 2. And stage 3 is where most of you have gotten in trouble in your life, I guarantee it. Because you watch a stock go from 100 to 200 to 300 to 400 to 500, it finally falls and you go, finally a dip. I'm going to buy the dip, because that's what we've been taught, right? We've been taught that everything that dips eventually goes back up. It's not true, but that's what we've been taught, because that happened with Apple and Google and Amazon and 20 other countries out of companies out of 6,000. But what's happening in stage 3 is they're getting out, and it is the beginning of the end, not a buying opportunity. Now, in this case, sure, it pulled, and then it did briefly rally in here, right? But eventually, it rolls over and enters stage 4, and that is the markdown phase. And typically, leading stocks, your Apples, your Amazons, your PayPals, your Googles, will fall 50 to 80% in stage 4. 50 to 80. And the reason it falls so consistently, it's almost the exact inverse of stage 2, is that consistent buying demand is gone, right? The Warren Buffetts of the world, the BlackRocks who can buy day after day, week after week for 3 months straight are gone. Now it's you and me. You buying every day for 3 months straight? I don't think so, right? You fire your shot, you're out of money. Maybe you buy a little more. You dollar cost average a couple of times, but that's it. And so once that consistent demand that was propelling the stock higher is gone, well, now it's just a game of uncle. And this is when the diamond hands crowd really gets their shirt handed to them, because everybody stops or sitting in here. It blows through. Everybody and their mom had a stop loss right in here at those at the 1-year lows, and it breaks through. And in fact, this thing came all the way down to $50 a share from 500. It's a 90% drop. Okay? And then what happens next? Well, it's going to keep falling until it gets cheap enough that people again want to buy it. They start accumulating, right? Forming a new phase 1 or stage 1. It goes through the whole process over and over again. Okay, so this is the 4 stages of the stock cycle, and every growth stock goes through it. If we go back and you look at Amazon and Nvidia and PayPal and all those stocks, you'll see this exact same pattern playing out over and over again. Now, Amazon, we are a bit late here in the cycle. It is only up, 20,000% since inception. But look at here. This was not long ago. This is 2022, okay? Look at the decline here. 57% decline. Look at PayPal. Look what it did in a bear market. Everything comes back. Give me a break. Stock fell 78%. It's still not back. Look at Crocs. This is a great example. One of my favorites in here. Look at Crocs. Now, let me take this off. Here is the initial public offering. This is when it first became a publicly traded stock, hit the market in 2006. Think back 20 years. It's hard, I know. Some of you guys are too young for that. I hate being old. But remember, when they were these shoes coming out, they're everywhere. They're flying off the shelves. They're like, God, they're ugly, but man, they're comfortable. And everyone's wearing these stupid things, okay? I'm proud that I've never bought a pair, but both my kids have them. But look here. Here's your stage 1. Just chopping around for 6-7 months. Breaks the high. Good, steady run in stage 2. Whoops. And see how this 50-day moving average, this dashed line, see how it pretty much held the rally all the way through? That's your stage 2. And then look at this candle right here. 1 week. Nasty, nasty week. Stock fell 31% in a week. It's over. That's all you need to see. Not, okay, let's see if it comes back. Nope. And you got the biggest weekly volume since inception. Its biggest down week since the rally. Closed way below this 50-day moving average. The party is over. Quick little stage 3. And then the stage 4 decline took it all the way to $1 per share. Now, we got to buy the dip, right? It all comes back. Think again. Think again. It took from 2007 to 2021 to get back. You finally double your money and it comes all the way back down. So if you had been holding this stock for the last 19 years straight, you're finally up 80%. That's like 1% a year compounded, okay? So I encourage you to step back from time to time, look at the chart, see where it lies in those 4 stages of the stock cycle. Because that's going to tell you very quickly if it's a stock you should run from or try to be buying. Okay? NVIDIA, oh yeah, NVIDIA too. I mean, all of them. Oh, a lot of these stocks did. It would be a little hard to imagine NVIDIA falling 70% again. But I guess put it at log scale so we can actually see here. But I could see it falling 40, 45%. In fact, how much did it fall here in 25? Peak to trough, what is that? That's 44%, folks. That's a lot for a $3 or $4 trillion company. And that was last year. So do not ever think, well, that can't happen to my stock. Well, that may be true, but not Google or not Apple or not Amazon. Yes, those two, all of them. Nothing is immune. Okay? All right, let's take a look at some stocks. Seagate definitely trying to hold a stage 2 rally. Now, how do you know when to buy these stocks, right? Obviously, we want them in stage 2, but how do we know precisely where to buy? How do we take a freaking scalpel to this stuff and get right in there, right where the stock should break out higher? This is going to be your bread and butter setup, which is the breakout pattern. So, give me any stock that's made a decent rally in the last year, and we're going to take a look at it. But this is what you want to look for. I'll show you this, then we'll start looking at individual stocks, and we'll dive into copper. This is the pattern you want to see, okay? Turn all the moving averages off. They really don't matter. We'll go back in time a little bit to right over in here. And this is what we're looking for. Firstly, do not be scared to buy stocks at their highs. If a stock is going to go 200, 300, 500, 1,000% higher, it has to make a lot of new highs. So many people make the mistake of saying, well, I'm supposed to buy low and sell high. And they interpret that as, well, buy low on the chart. But folks, what looks high today very well may end up being that you bought low, right? Do not try to buy low based on where it's been. Try to buy low based on where it's going. Okay, so you got to get over this. I won't buy stocks at their highs. This is the pattern we want to see. 1, clean stage 2 uptrend. They say, oh, it's already up 100, 200%. I hope it's up 500%. I want to ride the momentum. There's a reason it's doubled or tripled or quadrupled. It's getting consistently bought. And Newton's first law says an object in motion tends to stay in motion, right? Stock going up tends to keep going up. So you get the big run, and then you want to look for this shallowing pattern where you get this nice, clean kind of consolidation on the chart. And what's happening here is that supply is being sucked out of the stock, right? They were buying it for 150 and 200 and 250 and 300 till eventually, okay, there's some profit taking. They're manipulating the news cycle. It has to digest that move. And so what happens in here is it sells off a little, institutions buy it up. It dips a little, they buy it up. It dips a little, they buy it up, right? And they're absorbing that supply. They're sucking the amount of shares, what's called the float, the number out there in the market. They're sucking it up until there's fewer and fewer and fewer shares out there to trade. And what happens is they are making the supply, how many shares? Whoops. Sorry, I'm still learning this new little screen here. They are making the supply go down. But if demand either goes up or just stays flat. What happens when supply goes down? There's still the same amount of buying pressure. Well, the stock can break out. So that's why this is what we're looking for. We want to buy here when it breaks out from this pattern. And that's where you can often get these big explosive moves from. I mean, just this right in here, just these however many days this was a 50% move in 3 weeks. And you'll often see this set up over and over again. I got a lot of crap on this chart now. Let me clean it up a little for you. So we saw that happen over in here, right? As the stock came up and consolidated and tightened really nicely. There's your breakout buy. Makes a 50% run higher. Again, comes in kind of deep and then tightens up and shallows here, breaks out again. Another nice big run higher. It's pulled down, and now it's trying to break out again. So get a little ahead of itself right here on the 18th. If we put the moving averages back on, we're kind of violating this 50-day here more than I'd like. So it really needs to come up here and rally and get moving. But these are where you want to buy, right? I want to get in right here before it goes up 50% in 2 weeks, right? You make 50% in 2 weeks. You do that a couple of times a year. You're the hottest guy on Wall Street, okay? That's all I'm trying to do. I'm not trying to buy a stock in 2026 that I still hold in 2033 and go, wow, did I have great insight? This is what's called swing trading. I want to buy here and hold it for a couple of weeks, a couple of months. This is 2 months. It doubles, 115%, right? That's what I'm after. These nice explosions to the upside. And so if I can top down take this is a daily chart. If I could say, okay, let me look at the S&P 500. I'd like it in a bull market. Would you call that a bull market? Yeah, if not, you need to go to a Lens Center and get your eyes checked because we're keep making new highs. This is a bull market, right? Step 2, where do I look? There are 6,000 publicly traded companies out there. There's beverage stocks. There's drywall suppliers. There's semiconductors. There's utilities. How the heck do I know what to look at? Well, one of the easiest ways is just to see what's going up. This is our industry strength indicator. And this is free for all of our Black Ops members. So if for any reason anyone in here is not a Black Ops member, what are you waiting for? It is $5 for the year. That's it. I ain't getting rich off this stuff, okay? I'm losing money on this, but we got to do something. People don't value what they don't pay for. So go to tradewithross.com. There's a QR code over there in the corner if you want to scan that. Get signed up. It's $5 for the whole year. And you'll get these sessions every Monday. We may have to move them back to Zoom. We used to do it last year. We'll see how long YouTube lets us ride here. But there's another Zoom-only session every Thursday. You get access to this indicator, my newsletter I talked about, tons and tons of stuff. It is $5. There's no strings. It renews at $1,000, anything like that, okay? So if you don't, look, I'm not going to hold a gun to your head, right? I'm not getting rich off this stuff, but if I can't deliver you $5 worth of value, they wouldn't even give me a microphone, okay? So what is this looking at? Well, it is looking at 40 different sector ETFs and tracking their performance over the last 1 and 2 and 3 and 6 and 9 and 12-month periods. Now, why does that matter? Well, let's think about what we've been talking about. What drives stocks? Institutions, mutual funds, hedge funds, right? Was it Yale or Harvard? One of those endowments took a $2 billion position in SpaceX. Anything with a B in it, anything with 3 commas, okay, in their account value, move stocks, has to act tactfully. And so if whatever they're buying is going to be going up, whatever they're selling is going to go down, it stands to reason we want to be in their wake. Any boaters in here, right? You want to go in their wake. You want to let the momentum they're creating drive it higher. Harvard. Thank you, Jeff. I thought it was Harvard. And so the things they're buying the most, the areas of the market where they're deploying capital are going to go up faster than the others. And so this is a really quick and easy way to see what's going up. Where's money going into? So it was memory and storage that were really leading. In fact, I think this was the top over 6, 9, 12, even 1, 2, and 3 months a little while back. That was the theme. Of course, a lot of those stocks got hammered the last month or so. If you go back and look at your SanDisks and look at your Microns, the party all came to an end. Right? We did buy this one, following that exact same pattern I showed you. We're from 460 to 1,250 in 2 months, and then it started to roll over. Up, down to the 50-day, closing below it, party's over. Maybe it comes back, but this is what we wanted, this move in here. Okay? But what are we seeing begin to rise up the ranks now? What's leading over the shorter term? Obviously, anyone with eyeballs can see that gold miners are doing very well. He's consistently ranked in the top out of 40. Cloud computing, doing extremely well. Cybersecurity, although it took the last month off, it might be basing, has also been leading, right? And so all I'm trying to do is identify 2, 3, 4 areas of the market that are consistently leading. Because again, they're not day trading. They're not buying this week to sell next week. They're buying this quarter to sell 2, 3, 4, 6 quarters from now. Okay, so we want to see the stuff that's consistently rising. You know what's been consistently outperforming for multiple years here? Look at this. This is the S&P 500. Okay. Oh, whoops. Hold on. That's the S&P 500 index. This is the semiconductor index. Leading. Look back here. It was leading. So here's the bear market. Coming right out of the bear market in 2022. See here? 2022. Notice how the semiconductors were leading in July 23. Leading in Jan 24. Not by a little, right? The index was up 28%. The semiconductor index was up 90%. There's where the money's going. Okay? Massive outperformance against the market. That's been the leading area. So it's not like, oh, it led for a week, it's going to change next week and back again and flip back and forth, right? These themes can often run for a while. So this is what we're looking at. If it's, what are the stocks in this group that are setting up well? So let's look at some. Let's just take gold miners, for example. We've got 4 minutes till the market opens. Looks like we're set to gap down just a hair. NASDAQ down 0.5%, S&P down 0.25%, gold still rallying. Look at that. Beautiful. I just closed out my gold contract I think I did on Friday. Should have held it. Now, do you see why I bought gold? I did a video on this. I told you guys I was doing it. I did a YouTube video. I bought the gold futures live on the video. And look what it's done. You think I'm that lucky? You think it's a coincidence I bought this day right here, right before this massive rally in gold started? I'm doing the exact same thing. I did the exact same thing I'm teaching you here. So let's look at gold. Same cycle as stocks, right? Look at the stage 2 uptrend. Look at how for 2 years it held. Give it maybe a couple percent below here and there, but held that 50-day moving average all the way up from 2,000 to 5,600. Look at that the little wick right there. Until finally, boom, it's over. Okay? All right. It's over. I bought at 2,000. I'm out at 4,800. I'll be okay. All right? So we let it decline. Now, this is not a stock. It's a multi-trillion-dollar global metals market. So probably not going to see 50 to 80% decline like you would in a stock, but a pretty nasty 7 or 8 months. And during that decline, notice how it's the exact opposite of what we want to see. See the 50-day moving average's dashed line? See, it was holding, supporting it on the way up, and then once it crossed through, it's over. Holds below it. Holds below it, right? It was supporting the stock. Now it's resistance for the stock. Okay? So we're waiting for is that to turn. And that same pattern I identified for you, that shallowing base pattern, is the exact same thing you're going to see off the lows. The stock, the gold, the price of Beanie Babies, hell, I don't care, is same function of supply and demand. And so it is going to continue to decline until they start buying and the demand steps up. Then this dip was less shallow than the last one. And this dip was less shallow than the last one. And this dip was less shallow than the last. See how it kind of forms that wedging? That's what I mean when I say shallowing. Like it's like a spring coiling up, getting ready to release its energy. Okay? And so, whoops. This is where I bought gold. I literally just sold it Friday. I don't know why. Y'all ever had those moments where you're like, I can't even think this weekend. I'm just going to go to cash and everything. I did that. Bought right here. And look at the move, right? Now, let's zoom out. In the last, well, at any time in 2026, what is the only month you would have wanted to own gold? What month in 2026 did you want to own gold? Only August. That's the only month that was good. You lost in January. Well, I take it back. January did rally. I'm sorry. I told you wrong here. It did rally in January. That was the last. But since January, February was ugly. March was ugly. April was ugly. May was ugly. June, July went nowhere. And then August has been the month, right? So, you know, I'm not that lucky. I don't have any great insights into geopolitics or central bank gold reserves. I don't have Bill Ackman on speed dial. It's the exact same formation that forms every time. And so if you buy here, you look for an explosion higher. Now, what about your risk? How do you know when to get out? They're not going to work 100% of the time. Nothing does. If you think you're going to be the first guy to ever have a 100% win rate in the stock market, you're fooling yourself. So where am I wrong? If I buy here, okay, where does this stock or index, whatever I'm buying, need to fall to get out? Well, I put my stop loss at the last swing low. I'll paint it red. Now, why there? Well, let's think about it. It sold till they finally started driving it up. That was the low. Didn't sell. They drove it up. All right, a little higher. This time they sold off, drove it up a little higher. This time sold it up a little higher. Right? Why is the low getting higher and higher and higher? Because there's fewer and fewer and fewer selling each time. That's what lets you know the supply is being absorbed and it's contracting. So, again, it's not perfect. It's not 100% of the time, but generally, after it goes here, it won't go down that low again. Once it comes down here, it shouldn't go that low again. Down here, same thing. So the last swing low, the last little low before it breaks out is where I want my stop loss. And this is gold, okay? It's not going to run 100% in 3 weeks, but you risked 2.6%, right? 2.6, that was your risk. And you're up 13. So you're up 5 times your risk. It's taken you a whopping 2 weeks. You could do, if you did a minor, it'd be obviously more. If you did an option or you did, futures with some leverage, is what I did. This is the micro gold contract. It's 10 ounces of gold. So I bought one contract. It was, whatever it was, $44,000 worth of gold. Made $4 or $5 grand real quick and dumped the thing. Now this is micro gold futures. You could trade GLD if you want. Let's trade just like a stock. It's an ETF that tracks the price of gold. It did the exact same thing. It's lock, stock, and barrel, the same move you got in gold futures. Same exact thing here, right? Gaps on a breakout right there from 380 to 420. You could have bought, Barrick changed his ticker. Could have bought Barrick. You could have bought one of the gold miners. EM Gold, yeah, IAG, great stock. Lots of opportunities there. Until gold is a higher low, this is technically a bear market rally for gold. Kevin, you do what you want, bud. I mean, I don't know how you can call that a bear market rally. It's above all the moving averages, and I mean, it's the biggest rally we've seen. Anyway, whatever. To each his own. But I'm buying. I bought. Yeah, AEM, right? Newmont, NEM. Yeah, all these track gold. And they may not move perfectly. It's not going to be like one for one, but you see the exact pretty similar patterns in here. I would watch gold. That's the big thing driving this. But see, that would have got you in here at 100 to 130. If you did Agnico Eagles, you'd have got it at 150. It ran to 218. See these other ones in here? See how this works when gold is rallying? Can everybody see that? See how you ran from 80 to 130? It comes in, it shallows, it tightens up just beautifully. You buy the breakout at 130, your stop's at 120, you're risking 7%. And it very quickly ran from 130 to 190. What did it do next? Same thing it does every time. And listen, it's not going to stop to the exact penny, but like just look for this overall structure, right? This is what we want to see. There's your breakout. And eventually it's going to end. Eventually the party's going to be over. We saw it in gold in January of this year when gold and silver and all that really just took an absolute dump, and that was because the exchanges raised margin to get out the short sellers and or the leverage longs and slow down the momentum, and it comes down, and these all come down with it until it recorrects. All right. Battery storage for AI. Brian, make your case. I like where you're heading. But make your case. Do I still think Jack is a good buy? Yeah, it looks like it's setting up again here. So Jack is another great example. It's the exact same pattern. Big time coming off the lows. If you scroll out and look at Jack, I mean, talk about a stage 4. Yikes. Why do they go to stage 4? Well, they're not doing very well. Their same store sales are declining. The debt is going up. The business is being run by very smart people. They finally bring in a new CEO. He's the guy that turned around Taco Bell. And after falling from 100 to 10, look what Jack does. You see it? See the same thing? Any dip is immediately bought up. Nice little wiggle. There's the breakout. This is when I did the video on it. From 14 to 18. Get a little retest. Right in there, right? Revisiting what was resistance becomes support. Blasts out. This was the earnings report. It gapped up. And it's exactly, when I bought it at 14, I told people I'm looking for 22. Why did I say I was looking for 22? That's the last place where there's trap buyers. Just put yourself in this chart. In all of January and half of February, everybody who bought paid $20 to $23 a share. And all of them have been getting absolutely taken out behind the woodshed and beaten with a rusty stick all year long. Their money got cut in half in 3 months. When you buy a stock goes 50%, what do you say? Please, God, I don't want profits anymore. I just want to get out even. I'll take even. I'll never do it again. I promise, right? And so when you've been underwater and you get a chance to sell at break even, you are going to take it. This is a big old area of supply. This was demand, right? So when there's demand, is going to chase the last supply zone. And if all these people that have been underwater for 7, 8, 9 months finally get a chance to sell on a gap in earnings that really weren't that good anyway, they're going to take it and drive it back down. And so what needs to happen now? Well, it needs to set up again. And it probably will. It looks like it's trying to. It's a little shaky at the moment. Kind of blew through on this earnings move that was rejected pretty quickly. But, if it comes in and kind of holds above these averages and tightens up a little, absolutely. And this time it's not going to stop at 24. This time you're probably going to go up into the 30s, if not 40s. So it's all structural. How many people in this room have ever paid money for an indicator? This one's this super secret, mystery early mover with the red dots and the green lines, and AI coded it, right? They don't make, how many indicators will you use a day? A moving average or two? It's all there, folks. You don't need all that stuff. This is how you find the obvious ones, right? Okay. All right. Anyone who is not a member of the Black Ops, be sure to sign up. I'm going to look at your stocks in 10 seconds here. I'm going to put a little banner up. There it is. Oh, it's already on the other thing. Never mind. Don't need it. Yeah, down there at the bottom. So tradewithross.com, get signed up. If we spend an hour together every Monday between now and August of 2027, I assure you, you will not recognize the you today. Okay? If I cannot show you how to make $5 in the next 365 days, I wouldn't be employed. I'm not saying I'm going to get everything right. I'm not saying I'm the greatest trader who's ever lived. I'm a decent trader, I think, and I think I do a pretty good job of breaking this down in ways people understand it. I'm from Alabama, so I don't talk the Wall Street talk and try to confuse you and sound smart, even though I've held 4 securities licenses. I was a VP at JP Morgan. All that stupid crap that some people get impressed by, doesn't matter. Can look for short term on CBRS and Micron. Short term, Cerberus looks terrible. Classic IPO. Classic IPO. They price it as high as they can. It immediately sells off. It looked like it was kind of trying. It still may. This is about right. It went from 375 to 175. It's about cut in half, which is about what you typically see, at least half from its peak. And you can see it's trying to kind of start to come in. So I think it's early. But if it builds that base, or even if it comes down and builds one even lower, like that first IPO base can make you a lot of money. Now, when you say short term, you're talking like 5-minute chart, because it looks equally terrible in every time frame here to me. Not saying it can't go up. Might be 500 tomorrow. I don't know, but it's not going to go up for the reasons I look for. I'll tell you that. And the other one you said was Micron, MU. Micron gapping down a little. I mean, I think Micron is done personally. Maybe not. It could still have some juice in the tank. It's definitely trying. Can you see the early stages of one of these shallowing base patterns? See how it dipped from the blow off top, about 40%. So not quite a nasty stage 4 decline, but it's trying, right? It's kind of coming up in here, and it's beginning to consolidate. So it absolutely could. I would ideally prefer it do this above the 50-day moving average. Like, I'll let it slide temporarily. You know, if you look at when we bought it over here in April, this is in my Alpha Stock service, I was like, okay, it's doing good. It's coming in. It's kind of caught up. I thought it was going to do something like this. Well, what happened in March of this year? Our leaders decided to invade Iran. Stock market doesn't like unexpected wars. They don't like when oil prices double in a week or two, right? So everything went down. But notice how it reacted. Immediately, in about a week and a half, rallied 50%. A 50% move in 15 days. That's a huge amount of demand to move a $1 trillion company up 50% in 2 weeks. Do you have any idea the amount of money and buying power it takes to drive a company that big, that high, that fast? It's massive. So all the demand you need to see is right there on the chart. And then it just couldn't be any prettier. It couldn't be any prettier. It comes in, gives you just 1, 2, 3, 4, 5 days of that final, just absorbing the supply. Everybody's going to get out, it's getting out. Look at how calm it gets. Look at how the volume dries up. And then right here, this day, on the arrow, we bought volume spikes, never came back, and soared from 460 to 1100. This is not a penny stock, folks. This is not some little, newsletter out of nowhere that drove it up with a bunch of kids in their mom's basement. This is a $1 trillion company that delivered a 120% gain in a month and a half, in 2 months, right? So this is stuff you can do. Now, if you looked at this industry strength indicator then in March and April, guess what you saw? Semiconductor, 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 semiconductor storage, right? It was clearly in the lead. So that was the lead. But now, it hasn't been leading the last month or two, right? It's down 30%. So got to see if it can come back and firm up again. Looks like the 50's still holding on Micron. All this is below the 50. I mean, it is. You're right. It is back there trying to stick to it, and I'd let it go if it happens. It went too far too fast here. It should have just kind of kept growing more like this. In which case, the 50-day would be like this, so it'd be okay. But we don't need to get into the specifics of blow-off tops and exhaustion candles and RS strength and all that. I will save that for another day. Our semiconductors in stage 4 now. I mean, I think they're in stage 3. I think they're getting out. Now, it is possible. It can happen. The stock goes from stage 3 back to stage 2. Things change, right? They drove up all the semiconductors based on the demand for the GPUs and the data centers and the AI. Say valuations have reached their level. I mean, some new technology can come out. It's holy crap, the demand's going to be 5x what we thought. Back on the buy. So, things change, but in general, and it's easy to do this with individual stocks. Thoughts on IOVA? I mean, it's moving like crazy now. Is this moving with the deal with the cancer treatment? The drug slipped my mind. What's the pharmaceutical company that doubled last week on a successful trial with it was like a tailored cancer vaccine or cancer treatment? I'm botching this. I know. I'm not a medical guy. Moderna, thank you. Yes. Moderna, Brian. Yeah. I mean, look at Moderna. Like, no one saw that coming. Up 85% overnight. Then it opens up and runs another 50%. Like, just massive move. Huge stuff. So that I mean, you can't predict those, right? That's just a once in a decade opportunity where if you own the stock, boy, did you have a good day. Now, what would I be doing now? I'd be selling the stock. Now, I haven't done any research. If it's really like they've cured cancer, it's worth $1 trillion, if not more. Like it's going to 20x from here. But I don't know. But any other stock I buy, a mega cap or a large cap that goes up 176% in a day, Ross hits the sell button. Okay, I'd be selling it right here at 135. Still more than a double. No insider buying on the Moderna, and that's not surprising. I mean, they would get brought in front of Congress. They know when a big company like this makes a huge move like that on the biggest piece of medical news of the year, they're going to spot you. If it happens in, Jim Bob's bait tackle and trailing motors, probably nobody going to pay attention, right? Chesapeake, like a given special to me. Am I reading this correctly? Yeah, I agree. So this is Checkpoint. There's cybersecurity, right? Software technology. Isn't that a cybersecurity company? Development, marketing, software, hardware solutions, IT professionals, quantum, cloud guard. Okay, maybe not. Headquartered in Israel. Okay, interesting. Wow, Blake, good job, man. Wish I had a Moderna call. Thanks for the call, bud. Should text me. Yeah, so Checkpoint looks great, right? Now, what's it been in? Nasty stage 4. From 240 to 100. But what do we want to see? We want to see that rounded bottom. That as it comes down, it kind of shallows out. and consolidate, and they get the supply, right? It's doing exactly what I want to see. Looks great. So when this thing breaks out, where's it going to? Let's just pretend, okay? This is a good exercise. Let's pretend that the next few weeks with Checkpoint look something like this, okay? Follows we want to see. And then it has a day like this, okay? So obviously, you want to be buying right there when it clears supply. Your stop loss should be right here. Where would you be selling this stock? Type your answer in. And then I'm going to look at another Majal stocks. I'll shut up and quit teaching. But where would you sell this? I want to see who's been paying attention. Give me a number. If you bought this stock at a breakout above $140 a share, where would be your first target? You might peel some off, sell a third, sell a quarter, sell half. What do you think? David, 180, 180, 180, 180, 190, 200, 200, 190. God bless you, beautiful people. Yes, exactly. You nailed it. Right. Right in here. Right? That last place where you saw good supply, I'd call it between, like 180 to probably 200, 210, right over in there. And it's not to say it can't go higher. Like, it probably will. But if it runs here, there's a very good chance it's going to at the least stall there, if not find some sellers and push back and have to come back and get going again, right? So if you buy it, you make a quick move, and you get that 20, 30, what is this? Probably 35-ish, 33%. Sell a third, sell a half. Take some profits. Raise your stop to break even. Now you got free money. Playing with house money. And I did that with Jack, and I had a few angry people in the comments. Some of y'all are, not you guys, but there's some nasty people in YouTube comments. And they're like, oh, he's pumping, dumping this stock. I'm like, I'm not pumping, dumping a multi-billion-dollar company. What are we talking, pump and dump? I bought it here. I did the video. I showed the trade. I said I'm going to sell it at 22, and it opened at 22. Now, it may be worth 50 in a month from now, but when you get a stock that goes up 55% in 7 weeks, like, take it. Take half at least. Take some. And so, you'd have felt really good selling at 22, or we did when it pulled back to 16. You're still up. Yeah, I mean, it can still keep going. You believe in the thesis, think the turnaround is going to happen, the short squeeze is going to play out. Great, it could, absolutely. But I just don't look a gift horse in the mouth, okay? Robert, my man, sold Jack and Ethereum at 21. Beautiful, beautiful. Yeah, Michelle, they're evil. I mean, listen, 95% of y'all are the nicest people. Some of you give me way more credit than I asked for, but they pop up on my phone all night, and I'm like, oh, that's so nice, and thank you, I appreciate it. It's so kind of you to say. And there's one, nasty comment, and it just ruins my night. I guess I'm just not emotionally mature. But I turn a lot of them off. Make sure to pay yourself. Burton, nailed it, yes. All right, give me some stocks. Let's take a look. BTU. Yeah, so BTU is one of the ones I did last week. Peabody. It's done very well. I just closed everything out for, I don't know why I did that. I just had a weird, I'm just going to take some risk off of the weekend. I had a weird feeling that Trump's going to do something, but he didn't. Yeah, so look at BTU here. It was coming in. It was tightening, and then a nasty earnings. It dipped. Look at how fast it came back. Nice little handle. So when these happen, I call this a shakeout move. And these can actually be even stronger setups. Because what's happening here, that's the shakeout. What's happening is, and I'll put the earnings on so you can see it. See, that was the earnings day. It gapped down 10%. But we saw what we saw. Like, they're coming in, they're consolidating. Now, if you're building a position in BTU, where's your stop loss going to be? The low here is 23, the low here is 22, low here is 22. You're going to put your damn stop at 22, right? So this shakeout, as it gaps down, all those people get stopped out. So tons of shares hit the market, lots of supply, right? That should drive it lower. What do the institutions do? Thank you, sir. We'll take those. Drive it right back up. So now the stock is even more concentrated. They've gobbled up even more supply. The float is even smaller. beautiful little handle. So yeah, we bought this one here, and it's worked out really nicely. Now this is BTU. It's Peabody Energy. It's not, some little $3 biotech. It's going to quadruple in a week, but it's doing nicely. Nice little run. All right. Oh boy, a lot of stocks. All right, let's see what we can get through. Lightning round. Let's do it. HPE is a buy below 51.46. Love it. Yes, beautiful buy. Beautiful buy. See why? It's a retest. Big move. There's your consolidation, right? Breakout, retest. Like it. Risk 7, 8, 10%. It's going to keep going. This is do or die time. It's going to bounce right here. It's not. You got the 50-day moving average there at 49. Perfect. Perfect. NAW looking for another move. Yeah, it is. So this is another we bought. I say we bought. I did a video on it and I bought. I don't know what y'all did. Big stage 4, right? So these can be some of the most profitable trades. It's called a turnaround. If you just hate buying stocks at their highs, watch for this kind of stuff. Because, man, when a stock goes from 240 to 80, that's like a 65% decline. But from 80 back to 240 is a 180% move. So watch for those. But, yeah, we had a big gap here. But, yeah, I would agree. It's a little loose. It's not super contained. It's not super orderly. But, yeah, I mean, we're seeing those signs, right? We're seeing coming in, nice consolidation. Notice how the volume is drying up as the volatility is drying up. How it's holding above the 200-day. How the 50 is now pointing up. So, yeah, absolutely. And where we're going to sell this one, if it gets legs and starts running, right up here at about, 180, 200, right up in there. That's going to be the first stop. Do you ever trail stop loss? I don't, only because I'm in front of 5 screens 50 hours a week. I'm going to see it, right? I track my stuff 8 times a day. But if I wasn't, yeah, absolutely. Trail a stop, 10, 15, 20. I need to give it more than 10, probably 15, 20%. And just check at the end of each day to see if you're at a place you need to sell some. Take 2. Yeah, it's trying. Software stocks all got crushed the first half of this year. Agentic AI showed people what software AI can build, and they thought, oh, nobody's going to need software. I'll just have it make my own game. Hey, Claude, build me a video game, right? Turned out not that easy. But yeah, it is setting up. I like it. It's good. It's just you're in a supply zone, right? So it needs to. This is like a chop. It needs to either break out from here, or pull back into a retest or something before I'd be super interested in it. Franco Nevada. You been listening to Porter? This is one of Porter Stansberry's favorite gold royalty stocks. I had him on. I don't know if y'all saw. I did a video. Nice enough guy. He came on. I've never met him before. I just messaged him on Twitter. He's like, yeah, sure, I'll do it. Yeah, it's soaring, right? Why is this soaring? Because that gold setup we identified, remember? So if gold breaks out here like we did and goes up 12%, right? How much is a Franco Nevada going to go up? Well, Franco Nevada is a gold royalty company. They get a royalty on every ounce of gold that comes out of the ground. So if gold goes up 10%, their royalty might go up 80%, right? Because they're getting like a percentage of the profit or a percentage of the value. I forget exactly how it's calculated. So when gold goes up, gold miners go way up. When gold goes down, the same is also true. APLD, is it Applied Digital? Yes. I don't like it. It just fell 55%, which is technically a stage 4. So I would need, and that was a quick one too. I mean, at the very least, I'd need to see some real signs of accumulation in here. It is for the first time since the trade war, not only trading below its 200 days, it's lived below its 200 day for all summer. So, stocks that are in demand don't fall 50%. If think about it like a house. Anybody got a house you've seen? Oh, it's beautiful, but they want, $1 million for it, or $2 million, or 800,000, whatever it is. Well, if they cut that price in half next month, I bet you'd go consider it, right? It's the same thing with stocks. If it falls 50% and nobody buys it and it doesn't go up, it's not in demand. And I mean, it could go to 200, it could go to 2, but it's definitely not saying signs going to go up. Not right now, anyway. CareDX, my God, what a beauty this is. Big Gapper moves. Is this a U.S. company? Yeah, California. Okay. Yeah, I mean, it's a beautiful, beautiful move here. Let me see something. Yeah, this is a pretty clean. I mean, the only real that I think I might have spotted this would have been over in here. Like, this is a stock that was up big, consolidates. I guess you'd something like that of this, or anyway, you get the idea, right? Kind of came in and tightened up and got pretty nice in here, sort of breaking out. Uh, right now, it's just putting in cup with handles. It's run, handle. This was a gap. You would have missed this one. There's a little high tight flag, not cup with handles. High tight flag, breakout. Another little flat base. Like, just buy the breakout, but stop at the low. This is an absolute monster. I don't know what's going on with it, but yeah, love it. Wish I owned it. CDNA, we did that one. DTCC. Don't know what that is. Don't have that ticker. STXS. Stereo Taxes. Oh, boys from way back. Yeah, price action's terrible. I mean, this is one of those. The story's great. It's a cool idea. It's probably going to be worth a lot of money one day, but right now it's not that day. And the best ones are going to come when the story, the fundamentals line up with the chart and the technicals. That's where the money's made, right? There's a reason gold's perfect pattern breaking out now, and I'm buying it by the 10 or 100 ounces at a time, because inflation is above average, well above what the government's telling us. Central banks are buying at a record rate. Global central banks now own more gold than U.S. Treasuries for the first time since the 90s. The dollar's being massively devalued in a good economy. Apparently, we still need to print $2 trillion a year to fill the gap for this absolute welfare state. I mean, everything leads to gold going higher. And so then when you get a setup off the lows or at the highs, I'm going to buy the crap out of it, right? And you've seen multiple of these to the last rally. You'll see more in the years going forward. But this is when you buy into gold. And if you want to add into gold, same deal, right? There's your breakout. Beautiful. Breakout. There. Runs. Shallows. I mean, they all look a little bit different, right? But it's the same thing. It's the same action happening as the price action compresses. This one looked a little different than the other. I mean, it's just rinse and repeat when these things get rallying. And the reason it works so well in gold is the same reason it works so well in silver and cocoa and feeder cattle and Bitcoin and crude oil. It's because they're commodities and they trade purely on supply and demand. Well, that's what this chart is identifying. This pattern identifies when supply is shrinking and demand is increasing. And, with gold and with Bitcoin, there's no earnings report. There's no CEO got caught at a Coldplay concert with his secretary. There's no somebody pissed off the president. It's just gold. It's just Bitcoin. It's purely driven on supply and demand, right? So these tend to trade even better on these types of patterns. Yeah, I'm sad Burn rolled over. I thought it was going to come here and do something. This is another one of those stocks. Story's great. Company's good. I don't know if they're going to win or not. I bought some. I sold a little bit as it rallied and then took the rest off at like $4. It's a turnaround. If you don't know, this is a company that sells these basically non-lethal guns that shoot pepper spray or whatever, but they're having an advertising problem because Facebook and Instagram and these things see a gun and won't let them run advertisements, even though it's not a gun. So they're trying to fix that and find a way to, if they can, they're going to be worth 10 times this, 20 times this. So far, that doesn't happen, but yeah, I like the story. I just we need to see something follow through. EQH, Equitable Holdings. Yeah, another one. Again, none of these are stuff I've done videos on, but yeah, it's a annuity company. Nice clean uptrend. I think you got a little pullback to prior support. Notice the line in the sand here at $50. So for the last, call it 2 years, this was support. This was support. It rolled over. Now it's resistance. Now it's resistance. It stalled for 2-3 weeks. Now it should be support here. If it's going to bounce, it should do it between 48 and 49 and push higher. Just basic structure. Brian, FLNC, the battery. Woof. That's an ugly chart, my friend. I mean, I I don't know nothing about the company. I don't know what their earnings are. I don't know what their story is, their products, anything like that. I'm only analyzing the chart, and this chart says run for the hills. Okay, the chart says you're probably, hopefully, going to see some buyers at like $7 or $8, maybe 9. I mean, you got that's the next big. Listen, when Bitcoin broke down, I did a video. This was 6 months ago. I don't know when that was. When did I do that? I'll tell you. Back in February, I did a video. Go look at my channel, and I titled it "Bitcoin's going to fall to 60,000." Okay, and it was here. It was at like 98,000. And guys, you'd have thought I said Jesus isn't real. You'd have thought I peed on somebody's gravestone. I mean, I got more hate. You don't know anything. The blockchain, cold storage, hold, for retards. All of them. And look where it went. Exactly 60,000. Rallied right back to 60, 60, 60. Now it's getting legs. And I wasn't saying Bitcoin's garbage. It's going to go. It's stupid. But look what we had. I was long Bitcoin a few months earlier. But look, here is our breakout, right? I'm still going to get canceled. Here's what it is. It's been fun while it lasted. Okay, look at this. Consolidating, tightening, right? Recommended at 110, 125. Good. We're off to the races. One little retest. Okay, I let that go. Bounces, new high, and then, now it shouldn't come back here now. Okay, it's chopping around. I'm out of the thing. All right, back to new highs. Here we go. Oh, no, new lows. Oh, no, lower high, lower low. Okay? So what we want to see is tightening price action, right? What is this? This is getting wider, lower, all the wrong ers, right? And so it was very clearly breaking down. It can't hold new highs. It can hold support. Volatility is getting wider. So right in here, and we'll go back in time here, just so you can see what I saw, and you guys can spot the same thing next time. As soon as it broke through, it was at 100,000. I said, we're probably going to 60. Why would I pick 60,000? I mean, I don't know. Maybe the fact that that's where it sat for 9 months in 2024. All right here between 70,000 and kind of the lows, kind of 55-ish. But if you look, like the bulk of it, if you just try to draw a line that touched as many of these candles as possible, you gotta get those, scoop those, get as many of these as you can right up in there. Where's that line? 60,000. Okay? I said in witchcraft, folks. I'm not out here, reading tarot cards. That's kind of what I was looking for. Okay? And so let's extend this out. And then we'll go to real time. What do you know? It went to 60,000 and bounced. Rallied, came back. Like, it's just supply and demand. That's all we're doing. Okay? So use this on both sides. Yeah, let's about Disney Cruise. That's no fun there. But use this on both sides, right? Use it to see when they're buying. And if they're like, look, it's going to fall, great. You still love Bitcoin. You still want to buy it. Awesome. Good. Would you rather buy it at 90 or 80 or 70? Or would you rather have got it at 60,000? If you bought it at 60,000, it's about as good as you could have done in the last 2.5 years, right? And so everybody in there saying, Ross, you don't know what you're talking about. You're an idiot. How dare you? Bitcoin, you could have just listened to me and made more money, right? So anyway, that's how you can use this stuff. I'll trade Bitcoin, sure. Do I have a bunch of wealth in it tied long term? I'm diehard? Absolutely not. You think I'm putting my wealth on a flash drive? You're out of your mind. Um, G Vernova, somebody said. All right, let's look at a couple others for you. Let's see, G Vernova. So I mean, this has been one of the greats the last couple of years. GE Vernova, it's the nuclear arm. It's spun off from GE. It's been a 10x mover over the last 2 years. I mean, just perfect. You can see I've drawn a couple of little breakouts here where it's kind of coming in. Look at this, just nice and tight. Right there's your breakout move. It's very, very clean. Run from 700 to 1200. It's a little choppy now, right? It's putting in some pretty decent little drops. I mean, that's a 28% drop. It's about a 25%. It's not quite as big as it looks, but it's definitely not tight enough for me to want it. Like, I want to see it tightening. I just prefer to let it expand, tighten up. Expand, tighten up, right? When it tightens up, I'll buy as it expands and let it tighten and expands, right? That's what I'm trying to do. Thanks, C. White. Rocket Labs. No. Don't buy this. Well, listen, you buy it if you want to buy it, if you believe in it long term. But I wouldn't touch it here. I mean, maybe you could make a case for, all right, well, there's a big chunk of supply in here, so maybe they'll build a new base and rally it. But again, just think about it like any other piece of merchandise. If everybody wanted, if it was in demand, have you ever seen what's something that is constantly in demand, everybody loves and wants to buy? What's like a car they can't make it, like the G-Wagon or do you ever see those 60% off? If something's 60% off, it's either not a good product, or the price is just not anywhere close to its real value, or everybody hates them, they just don't want them for whatever reason, or they're whatever, right? Same thing with stocks, folks. Like, it's not good right now. Ross, can you make sense of why a name can have fantastic earnings yet the price still drops? Yeah, it's either it wasn't as good as expectations, or they usually it's forward guidance. Okay, so when a company reports earnings, they report three things. They report revenue, which is sales, how much money came in. They report net income, which is profits, right? And then management gives what they call forward guidance. And that's when they say, we are guiding to 12 billion in sales next quarter. We are guiding to 750 million in profit, or guiding to 18% profit margins. They give an idea where they think their numbers are going to be next quarter, next year. And if Wall Street said, okay, they're growing at 25% a year, it's consistently doing it, and they say, we think we're going to grow at maybe 21% next year, look out below. Okay, so that's typically what it is. And it's not always going to show up just here in the numbers, because this just shows you whether earnings and sales were above or below Wall Street consensus expectations. ASML. Yeah, looks great, right? See, look, notice how this one, the rally started over in here. I'd probably call it 780, rise up big. Comes in, little base periods into the 50, rallies. Kind of consolidates here into the 50, rallies. Now this, you might say, well, that kind of went below. Yeah, it did, but look how it responded. Is it a tennis ball or an egg? And that came from an investment. I said it once and somebody goes, Ross, you're stealing that. No, I didn't create that. It's from an investment. But he said, I like to buy tennis balls and I like to sell eggs. A tennis ball, when it bounces, when it falls to the ground, it's going to bounce. It's in demand. When something is cheap and people want to buy it, it drives the price back up. An egg does this. It splats. Rocket Lab, my friends, is an egg. It fell 50, 60%, and nobody buying it. This is a big old splat on the pavement, okay? Not saying it's a bad company. Not saying it won't be $1,000 stock 5 years. I have no idea. I'm just telling you what I'm seeing right now. And right now, nobody wants it. Figma. Sounds like a, I don't know what that sounds like. Yeah, okay. All right. Where did this one come from? Edward. I like it. Yes. This actually looks really good. What do they do? Technology services, package software, tools, collaborate on the life cycle, the software creation. Okay, something I don't understand. Anyway, software stock. Yeah, so what do we have here? Well, we have a deeply, deeply discounted IPO. So it hit the market at 85, jumped to 140 in 2 days. There's some hot demand for this thing last August, and then the beating begins, right? And this is that first breakout, the initial stage 2 initial shallowing base breakout. The first one after a company IPOs is generally the most powerful. It's where the bulk of the money is going to be made. If this is going to be a stock that runs 20,000% over the next 2 decades, this will be your absolute best chance to buy. So yes, look at this. Coming in nicely, big pushes in demand. Looks like earnings came out. The stock gapped down 15% on earnings. They don't give a crap. They bought it right back up anyway. Looks very, very good. Now, you do have a little bit of supply here at 30, but you're talking about 5, 6, 7 days. What you really want to look for is these periods where it sat there for months, right? So if you bought a breakout through here at, call it 28, yeah, my first target will be probably, 38-ish, right? Which is, I think, a pretty nice little first target, 35, 40%. Beyond that, you're probably looking up here, the mid-50s. And then the goal being this thing's up into new highs, and there is no supply, right? When the stock is at new all-time highs, like, there's going to eventually come supply. It's going to be people who are up huge and want to take it, or think the valuation has got crazy, or some macro thing happens like a war or a policy or a rate hike or something that's not directly tied to this company. But when a stock's making new all-time highs, it's a beautiful thing because everybody who owns it is up. No one is down on that stock. Not a single person on God's green earth. Every single shareholder is profitable. So everybody's happy. Nobody's in a rush to sell, right? It's doing good. It's going what it's supposed to do. So that's why stocks at high. That's why they can make these just blow off top moves. What's SpaceX doing? Okay, still chopping around in here. I still think we get to 80 in SpaceX. I mean, this is a massive short sellers going into the lockup. We're getting a little dead cat bounce in here, but I still think it comes down, sits around 100 for a week or two, and then gets down under 100, and that's when really the supply unlocks. People, they're going to start panicking under 100. That's what I think. Celsius. I haven't seen this one in a while. What's Celsius doing? Yeah, this looks pretty good too. I mean, it's the pattern is not what I want to see. Like, it's not exact. Like, it's widening, right? So I want to see it kind of tightening like this. Instead, it's really kind of widening. But man, there's a massive amount of demand has come in. I mean, the stock falls 18% in a day on earnings, and look at that buying, 45% in 18 days. Wow, huge buying. So I tell you what I'd like to see if I could get it from Celsius would be something, and it may be like right in here, somewhere around 35. I want to see it just stall for a few days or a couple of weeks. Like this is what I would want to see. Because a stock that is up 45% in the last 2 weeks is at risk of a pullback. I'd be one of the ones selling if I bought that low, right? It's just fact. That's why we like to buy coming out of tight. Volatility is expanding. Right? Energy's releasing. Well, energy just released all over the place, okay? So it needs to kind of calm down for a minute. But what we need to do is kind of absorb some of the supply. So I'd love to see it kind of chop around in here, few days, few weeks, just to absorb all the supply, just to get away all the people who want to sell from here, to let all these people who've been underwater cash out. And then, then it really sets up, and that's when you really have a move. Could just do this, right? Not saying it won't. Not saying I see any sign that this thing's going to fall tomorrow. But that's what I would prefer to see to give me kind of a lower risk setup in this stock. I just don't like buying them when they're extended, when they're already up big the last couple of days or weeks. It's just, you just run the risk. The odds are higher, I should say, of that pullback happening. All right, a lot of Vera, a lot of Redwire. Vera's coming in. Yep. Nice big move today, up 8%. Had a huge up day on volume Friday. You know, it's choppy. It's a biotech. It's only worth $2 billion, which puts it, I guess, just barely at the mid-cap threshold, but basically essentially a small-cap stock. So, you know, the bigger the company, the more liquid, the more institutional grade, the cleaner these patterns are going to tend to be, the easier it is to see. This one's just a little wilder, and I'll be the first one to tell you, I'm going to look at a bunch of stocks and be like, I don't know. I don't know what it's going to do. I don't see any signs that give me any kind of edge. I mean, you know, now you can see it did find support at 8 and rallied here, but like, you know, that's just a wild stock. I mean, it's hard to trade stuff like this. If you get this is one where I trade like high, tight, flat. I mean, you had one. Here's what we had. This is my Monday morning quarterbacking, right? So it's like, oh, yeah, sure, you would have. I get that. I totally understand. It's valid. I just want to go back. It's important to look at the winners and see what they did so you can spot it the next time, okay? And I'll put it in log scale to even all this out. So here you had the big rally from 3.5 to 10. It comes in. It shallows really nicely. There was your breakout. If you missed that one, you had a retest buy right there. Beautiful move higher, and then it goes from 7 to 15. It's a double, and you just have these little high tight flags where it breaks and then flags out and then breaks. Whoops. Then hell broke loose. It's just all over the place. I mean, I don't know what to tell you. Do you want to know what I see with Redwire? I don't see anything. I see a bunch of very confused people. I'm guessing they have no real. Yeah, they don't make any money. I mean, they only bring in 60, 100 million a quarter. Well, it's not that low. The company's worth $3 billion, but they're not making any money. They have no profits. So it's not quite a story stock. $100 billion is a decent amount of revenue. I was wrong about that, but it's just not tradable. I mean, not now anyway. Not for me. You got to really believe in it and just, you know, throw money at it and hope. All right, guys, listen, it is 9:20. I moved 2 weeks ago. I have a house full of boxes, and I promised my wife I would go put them in a trailer, drop them in the dump, and then come back to work. So I'm going to head out. But if you have not already, make sure you are a member of the Black Ops Trading Service. Heck, you probably got your $5 worth of value today, but you're going to get it every week for the next year. And I know I didn't get to everybody's stocks. We'll spend more time going through your stocks next week. But click the link, get signed up. It's $5 for the whole year. There are no strings. There are no tripwires. There are no crazy renewal rates, nothing like that. It's $5 for the year. Love to have you as a member. If not, still love you. Appreciate having you a subscriber. Make sure you subscribe to the channel for sure. And otherwise, I'll see all you guys next week. Thanks, everybody.